Give me 5 minutes and I will simplify valuation more than any other YouTube video. This is the only YouTube video you need to understand valuation. My name is Christophe Noor. I've been investing in the stock market for almost a decade now, and I have achieved a performance of 25% per year. And one key aspect of investing I have found over the years is to always simplify valuation. You don't need to have a very complex valuation tool, a lot of Excel frameworks that are completely useless. This is a clear waste of your time, because in investing you can only have so many opportunities, right? Not everything is for sale. You have to really pick the best opportunities in the stock market, which means you want to have a concentrated portfolio. What are the best opportunities? The opportunities that hit you 2 by 4. You need to explain to a child how cheap an investment is. You don't need complex investment ideas, complex valuation tools. And over the past few years, I have created a very simple framework when it comes to valuation. And it has helped me a lot because I have generated 25% per year. Okay, so I want to first start with this video by saying you don't need complex Excels. I've done this in the past when I was working in investment funds, completely useless. Second point, you want to invest in companies that are producing earnings and free cash flow. This method is not working for unprofitable young companies, okay? Only profitable companies with net income that is positive, always positive, and free cash flow that is always positive. Out of these two ratios, net income and free cash flow, you can see what is the most important metric. For some companies, it will be earnings, because the free cash flow is a mess. And for all the other companies, free cash flow is the most important part. I have an example for you. The free cash flow of ASML, for example, it's a company in the chip industry, is fluctuating a lot because they are reinvesting with a lot of capex, a lot of reinvestments. So for ASML, when the free cash flow is up and down, for ASML, you look at the PE ratio, price earnings ratio. You look at the price divided by the earnings per share. For all the other stocks, you look at the price to free cash flow. And I have an example to show you with MSCI, a company that I own in my portfolio. Look at this. I'm using a website called FiscalAI. You have a discount code in my description if you want to use this website. I'm using this website on a daily basis. And look at the price to free cash flow for MSCI. MSCI is a very simple company. They have exactly the same net income as the same free cash flow. So let's use the free cash flow and let's look at the price to free cash flow for this business. As you can see here in blue, you can click on the graphic lines here, put the average, put the median on FiscalAI. You see that the average and the median are roughly the same. On average, for the past 10 years, the price to free cash flow of this business has been 33, 34. Now, as you can see, it is widely fluctuating. In the past, during COVID, it was roughly 30, price to free cash flow of 30. And then in 2021, the price to free cash flow went up to 60. So compared to the past, compared to average, it was extremely expensive to invest in MSCI in 2021. And then it dropped, and we reached a valuation, a price to free cash flow of roughly 30, slightly below average. A first element to see if something is cheap is to compare to the average PE ratio, average price to free cash flow, and you see, you put this line, you put this trend, and now we are below the average, which means MSCI is cheaper than average. You can look at the price to free cash flow, you can look at the forward price to free cash flow and do exactly the same exercise. And you can also use another method for calculating valuation, is the DCF. Now that we have said on a multiples basis, maybe MSCI is cheap, you can use another website called Stock Unlock. Or again, you have an affiliate link in my description below. So what are your estimates for the future? If you think that MSCI will grow earnings at, 15% per year, they deserve a price to free cash flow of 30, and they will do 2% buybacks over the years. You put your assumptions here on this website. This is the valuation. You put your assumptions and the website will declare a simple intrinsic value. If these are your estimates, then the stock is 30% undervalued. And if you buy right now, you can expect a CAGR of 15% per year. So Fiscal AI and Stock Unlock, if you use these two websites, you can have a very simple valuation framework for all your stocks. If you like this content and you want to go deeper, I have a coaching program. In this program, you will learn the strategy I use to outperform the market. You will learn how to find winning opportunities. You will learn how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, inside the program, you will have access to an exclusive community of like-minded investors, and you will also have access to my personalized guidance to reach your investing goals. Click the first link in the description to get more information. You will get a short video that explains how everything works, completely for free. No need for your email address, just click the first link in the description and I'll see you on the other side.